Today we are talking to two of the central people in the DNB digital assets team, Morten Sunde and Nikolai Gobel. Welcome.
Thank you very much. Pleasure to be here.
Let us hear a little more about who you are and what is your responsibility within DNB. Morten, you could start.
Thank you. So I'm Ole, just call me Ole, and I'm head of emerging business products. So we are a centralized unit in DNB working with the more emerging business topics, and one of those are digital assets. So we have a centralized small digital asset team also working to position DNB for the future of a more digital finance world.
And then you, Nikolai.
Yes, Nikolai Gobel. So I'm a product manager on digital assets in DNB, so working on the product development of products within this space.
And then maybe for people outside of DNB, let us try to understand. You're saying you are a centralized team, but you are also a small team of 4 people, I think it is. But how do you work together with all the other departments and business areas in DNB?
Yeah, since this is a topic that definitely it will touch upon the retail markets, the corporate markets, all areas of banks, the bank potentially. We are centralized, so we utilize our centralized experts in the best possible way. But obviously it's very crucial that we are very customer driven in this, customer first. So we are working very closely with the different business areas to figure out how to position ourselves both with the current need, but also with the future needs.
So the digital development and DLT or whatever you call it, crypto, Bitcoin, whatever, it can hit your bank in different areas in different ways, and you are trying to coordinate it, or how is that?
Yes, so we are trying to be in front and in front of the development, trying to be the voice internally that approaches also the business side. This goes both ways, right? They get requests from the clients and we follow the developments elsewhere. And in the intersection of that, in the intersection of many things, but in the intersection of that, we have current relevant topics that we pursue. So it's we are a small team centrally, but we are a bigger team in general that is working with this in DNB. The ones that are centralized are the only ones that are dedicated towards this.
And then we have to talk about the Digital Asset Summit because it's the first time and it has been sold out. It has been special invited people, as I understand. But why are you doing this and why now?
Yeah, finally we are arranging this summit. We have actually been thinking about this a couple of years, but now we felt that this is the good timing to open up a little bit, invite customers, partners, the public sector, fintechs, the industry to our headquarters and get together to share insights. So we're going to have a lot of insights from the stage, but there is also a lot of insights in the audience to discuss these insights, share ideas, and hopefully we can together start discussing on the future of how this ecosystem is gonna evolve. Because what's sure that these developments will not happen in isolation. It's a we need all the parts of the financial system and the clients to interact to make exciting things happen here.
And it's about 1.5 or 2 years ago since I interviewed you guys in an article that was quite popular in a couple of days. But it was also interesting because we covered a lot of different topics, but not necessarily you didn't have any tough answers on each topic because you were in an exploration phase. But what have you learned since then? And maybe I could ask also you, Nikolai, what have you experienced? Because you come from the crypto broker scene before you were in DNB. So have you been surprised or what is happening inside of a bank?
Yes, obviously you have some ideas going into it, and then you realize how the situation is when you get in. It is a little bit different from the inside, but it has been a very pleasant journey. I'm very happy to be here and see how it works from the bank, and I think the timing was definitely right. DNB was ready to start looking into this more seriously. I think in the beginning, there was a very different focus. There was a lot of focus on the risk, because back when I started in 2022, we were primarily focusing on crypto and central bank digital currencies. At the time, crypto was associated with a lot of risk. You can remember 22, you had the FTX collapse and all the other bankruptcies, and this was still an unregulated space to a large degree. So it was a very different landscape. I think at that time we did focus a lot of our attention on how to work with crypto from an AML KYC perspective, how to reduce risk, the risk exposure for the bank because of our clients' exposure to crypto. And obviously we also were looking very closely into what the central bank was doing. I think over time, the whole market has matured quite a bit. It is obviously much more regulated now. We have done quite a lot of exploring, and then there are some product areas that have become much more mature. So I would say in general that we have moved a little bit, past at least some of the exploring, and have become a little bit more specific in what we want to work with. And at the same time, there have been new product areas that have emerged, which has gotten a lot of attention from us in the past few years that we did not pay that much attention to in the beginning. Stablecoins and tokenized money is one side of that, which is especially the last, say, 2 years have been very interesting from a bank perspective. And I think also the development that we're seeing in tokenized finance, that was not a very developed space when we started this work. Now we can see very steep trajectory on the development in that area as well. So that's maybe the way that I've seen it, and also it's also a lot about like bringing the organization along. So obviously, me personally coming from a crypto space, you're much more used to this phenomenon, but coming from a traditional finance space, this is still it's still very new and different, and it's been also very important to bring the whole organization with us, to bring the knowledge into the organization, so we can potentially in the future also deliver on customer needs within this space.
The fact that you now are inviting to such a broad conference, is that also a sign that now you are ready to go public, now you are ready to share more of your views, not being totally internally focused?
I think that we have been sharing a little bit already, and Nikolai has been quite sometimes in different medias, also in Kaupr, and I've also been with you guys, so that's been great to have these channels to share. And but I think the correct answer is that there's not a switch here. So, but I think we are gradually doing more and more of this, more sharing, more involving in the ecosystem, and hopefully the trajectory will pick up even more. As Nikolai alluded to, there's been a lot of maturing going on. The challenge is that it's not one development that is relevant. Customer interest is of course very important for us, but you also have the aspects, right, with the regulatory clarity, and you have the aspects with tech maturity, and that's in the center of that is our opportunity space. But it's expanding every year, meaning that we can do more and we can evolve more in the space.
We that are trying to cover the industry, we have seen a major change maybe since the ETFs was approved in the States last year, and After that, we had a debate about tokenization. You got stablecoins, and you even have a new administration in the US. Is that a turning point in the meeting between classical finance and the crypto industry?
I would say it's definitely a turning point. I think there's a few things it really made clear. One thing was obviously the institutionalization of the space. Crypto is, if you look at financial innovation, it's a little bit rare the way it has evolved because it's been like a bottom-up phenomenon. It's been a retail-up phenomenon. Most financial innovation starts top, from the institutional space. Products are only available to institutional players or professional players, and then it gradually opens up to the retail. So crypto has been a little bit the other way around. I think the ETFs, it clearly show that there is a large institutional demand as well, and that the whole industry is maturing towards an institutional grade setup, where you have players like BlackRock, for example, entering the space with this ETF. And I think the other thing it clearly proved was the demand for this, because the ETF has it blew away all previous sales records for ETFs. So it really shows that there is a large demand for this type of asset, and also not just in the typical form that we've seen it in, because crypto has mostly been traded as a spot product. Now we see there is a large demand for traditional vehicles for this. So it was definitely a turning point that changed the narrative quite drastically within the financial industry.
One question that we maybe haven't prepared, but I do have to ask you about this Bitcoin Treasury companies, because there are 12 or 13 companies that are on the stock exchange or moving into the stock exchange in Norway and Sweden that has gone on board on this strategy. And is that also part of that institutionalization, or is it another type of driver?
Yeah, I would definitely count it within that category. I think it also, there's other sides of it too. But definitely when we talk about this topic internally, a question that might arise is where is the institutional interest? And I think that these Bitcoin Treasury companies, they show that increasingly corporates and institutions are becoming interested in the crypto space. And this is an area which is very important to the bank, obviously, and also in general the risk appetite, you can say, in a bank is more. It's easier to work with institutions and corporates from a risk perspective than with retail. So it's definitely a very important development that has happened and that we've been paying attention to.
Then we also have to ask about the markets and the markets in the Nordic and in Europe. And maybe it won't hit you directly, but of course it has influence on the banks as well. I'm thinking about the MiCA regulations, because that is a change where right now all the Nordics have a process where they are taking applications into the financial authorities. And how important is that? Or is Europe moving too slow now compared to the US, or what do you think?
Yeah, I can start on that one maybe, but I think this was definitely a critical development when looking at it from a financial sector perspective. Before you had the regulation, it was not possible for most financial institutions to be involved in this space. And the regulation with MiCA and in Norway, the same framework, it has created a regulatory framework, so you now know how you can play in this space if you want to participate. So it has really opened the door for even thinking about this. With that said, there's obviously other things that needs to be in place as well, but we have seen a large trend, at least down in Europe, where more and more banks have been moving into this space. And the main catalyst for that, I would definitely say, is the MiCA regulation. On the question of whether it is a little bit too conservative compared to the US, I think we will have to see. The development in the US have been happening more recently, and definitely we do hear, if not complaints, at least comments about the problems with MiCA that some industry players see. But I think from the perspective of maturing the industry and allowing financial institutions to participate, this was an absolute necessary step. And then perhaps it needs to be revised when we see how the regulation in the US will turn out in practice. But I think it was a very important first step to professionalize the space.
In Norwegian, we also have called it stuereint. It doesn't mean crypto stuereint. I mean clean or whatever you translate it with. Is that true, Sunde? It's now allowed. It's Norwegian law, and it is here to stay.
Unfortunately, it's not always the same thing that something is regulated and stuereint. Even though it's major developments, right, with the MiCA regulation, the Genius Act, and also now by law in Norway. That said, there's still some lacks in terms of harmonization between the different regulations, and there are still a lot of open questions. This regulates specific things, but things like KYC and privacy still needs clear answer. So we saw it in the EU, right? It took some time first; it got regulated, but now we are seeing that European banks are starting to launch crypto services. So it also takes some time before regulation gets in place and until it gets integrated into financial services. So, and that's not because we are slow, but it's the nature of traditional finance. It's been built in I don't know how many decades or hundreds of years we have had banks, but it's an evolving business, and when a lot of money is getting integrated into traditional finance, we have to be cautious about how we integrate.
Enjoying the conversation? Visit the Kaupr.io website and subscribe to our YouTube channel to watch and listen to more insightful discussions. But did you also know that we offer a combined podcast and newsletter concept called Future of Finance? Subscribe to Future of Finance for curated news and expert insights delivered straight to your inbox, and to be notified when new videos and podcast episodes are released. Sign up today and never miss an update. And now maybe we should try to ask you guys about, do you have a roadmap? Are you now speeding ahead? Or is it still a combination of exploration, testing, discussing, and then try things out?
We have a roadmap. The thing with our roadmap is that it's iterated all the time. That's because of external and internal dynamics. So that's the nature of how this is to working in this space. Nonetheless, we cannot announce anything specific as of now. But our hope is for sure that no, I'm talking about our behalf, that we get enough of the elements we need in place so that we can start more actively to involve with customers in this space, and hopefully launch relevant products. But it takes time, as Nikolai has also alluded to, in this industry, and we need more certainty on specific topics before we can venture more actively forward.
Okay, so then I can maybe ask a little more open then. But could, for instance, custody be an area where it's natural for a bank to move?
This is an area where we have done some exploration and continued on a little bit. We have done proof of concepts and also prototyping on this topic. We think that, well, first of all, we see we see an increased usage of blockchain and DLT technology in general in finance. And this covers not only crypto, but it also covers the payment or settlement side with stablecoins and central bank digital currencies and so on, and also the assets. So we have obviously built an internal tech platform, so we are able to experiment with assets on chain. And I think this has been a key component of our exploration as well. And custody is definitely one of the capabilities that we have looked at, not only for our own sake to sort of be able to interact with and explore these types of assets, but also as something that could be interesting to offer to customers at one point. So for sure, it's been something we've been working on. Ole, maybe you have something to add on that?
Yeah, just to sum it up. So that's also explain why we have a iterative roadmap, right? And why we are approaching this with a more agnostic platform. The thing, right, for us is to safely move on and off the blockchain. That's part of it. And we have to, in order to do that, we have to understand the tax, the risk, the operations by doing so. So and this platform learn us how to hold things securely, to transact like tokenized money securely, and position ourselves in terms of whatever shape and form this space will take us in the future.
What about stablecoins then? Because that seems to be a very fast-moving area, especially in the States. And so far, most of the cryptocurrency or the currencies, the fiat currencies that the stablecoins is pegged to is US dollar. So Europe hasn't moved that fast yet, but still there is a lot of company launching new platforms, new launchers more or less each day. And that can also be, as I understand it, part of a new payment rails for the future. Is that how you view it as a bank?
You like to start, Nikolai?
Yeah, this, as I mentioned, this is one of the topics that we've been working a lot on the last couple of years, and also it has there's been a huge increase in attention on this topic, both externally but also internally in the, I would almost say, the last few months. So this is definitely getting a lot of attention, and we think stablecoins. I think what makes it really attractive to me is that blockchain technology has always been, proposed as a new sort of financial infrastructure. But the primary use of it so far has been speculation and investing. So people are, if you look outside Bitcoin, maybe that has sort of shaped its own investment narrative. I think the potential in most of the rest of blockchain technology has still to be proven, right? So we've been always been looking for what are these applications that will actually provide real world value to customers that will solve real problems. And I think stablecoin is maybe the first commercially ready application of the technology where you have a use case where you actually solve real problems for clients. And what we're seeing today for stablecoin is it's by far mostly crypto trading. And as a bank, this is not very interesting for us. We also see some remittances. So for example, family that supports or people that supports their family in third world countries. We also see some dollar exposure that, at least in some countries where there's big inflation, people just want to hold dollars, and stablecoins are maybe the easiest, most available form of dollar exposure. However, we see a very interesting potential for stablecoin to also take on other types of use cases. This could be B2B payment, cross-border B2B payments in payment corridors with less mature payment infrastructure, and we see a huge potential upside in the case of settlement for securities or tokenized securities.
We follow this closely, and what kind of use cases that get most traction is not of that is obviously of relevance for us as well, because it's relevant for different client groups in the banks. So what we are now looking at is whether we should take a position in this. There are different positions one could take. You have the issuer side. You could issue a stablecoin, right? You could create a wallet infrastructure and deal with the payments and holding this. And you could focus on building additional value driving service on top of this. So we are looking into exploring these different positions and looking to have good discussions with the market and internally on how to approach that. But we haven't landed on any strategy as of now.
So all three are still on the table? Or
all three are on the table. This is an area that has evolved very fast, so we are using a lot of time now to educate ourselves and others in order to really capture what this can mean for us as a bank, and those answers will define what kind of position that could be relevant for DNB to involve in.
Sort of a relevant topic, CBDCs or central bank digital money. The Norwegian Norges Bank, they are supposed to come with a report in the end of the year or maybe beginning of the next year for the phase 5, and then they are supposed to come out with an recommendation. And if they are going to recommend implementation of CBDCs, they should also probably recommend some changes in Norwegian law. How does this development look like from a major bank? Because you are, of course, today having a lot of all the money flow. You have the wholesale part of it, and of course your clients have the private money. Because as a citizen, I don't touch the central bank money, if you understand. So how do you see this topic develop?
Well, it's surely a hot topic. This is becoming big politics, and it's very relevant for us to follow suit and really monitor, but also being a bit more active on the development. So we are working closely together with Norges Bank, exploring the design of these central bank digital currencies. Currently, we are more focused towards the wholesale part of it, because that's where we see some clear potential advantage to this. The retail side of it is primary. The development is driven by ECB and EU there now, so we just have to see how that turns out. But the reason why the wholesale part is relevant for us is that we are looking into how we can improve the payment and the settlement system. So we are also seeing how we can utilize tokenized bank deposits and wholesale CBDC, and how we potentially can settle a tokenized security, let's be a bond, utilizing this structure. Also quite early stage exploration here as well, but these things are like the real exciting stuff for us as a bank, and we see potentially a lot of benefits both for the customers and ourselves in this scenario. On the retail side, we have to see how it plays out, basically.
Very often people says that it depends on the design, because you have this discussion about privacy and KYC and whatever, and in the Bitcoin community and also a lot of the other crypto communities, they are highly critical about CBDCs, and even in the States, I think they have forbidden it. But will then the correct way to do it was to wait and see what EU does on the retail side, but maybe move on with the wholesale part?
Well, we are a small part in this big development, so we will have to do the best around our end. But to the CBDC, the US has not stopped their wholesale experiment, so they are still working on that, and the EU is also working on the wholesale part of this, and then they are also doing it on DLT. I think the right answer here is that we have to be involved, discuss this design as you mentioned, so that we make sure that it benefits the clients, the benefits the society, and also the commercial banks in this, because they also have to have a natural role in this, and yeah, so it's quite challenging, right? There's a lot of incentives, there's a lot of costs. What are the values? We are trying as best as we can to navigate this, but it's really not up to us to dictate how this will evolve.
Okay, and another tokenization issue is the tokenization of stocks, and that has moved really, really fast in the last months. And the thinking, I think BlackRock has said that in 10 years or 15 years, everything will more or less be tokenized. And maybe right now the most important thing is maybe not gold or silver, but stocks. It seems to be moving a lot of new marketplaces and new ways to then trade stocks, which is wrapped by real stocks in a token way. Or how do you see this? And do you agree on this vision from BlackRock?
I think in general we believe in a world where tokenized securities will happen, and stocks will probably be one of them. Which of the asset classes that's will have the greatest benefits and gonna be the mainstream tokenization product first is I'm not sure of, but we see the potential that this will happen with all the traditional finance papers, because today the current financial infrastructure is quite siloed. It's not very available, and it's relatively slow. And with tokenization, this could make things both faster, cheaper, and more available. And if you can settle it also, if you both have the money and the assets on chain, and you can settle it 24/7 instantly, then we are talking real potential. So rather than discussing the specific security, I think we will see a general developments toward a more tokenized economy, where also stocks probably will be tokenized.
Yeah, and
I don't know if you have anything to add on
sorry,
that,
Nikolai.
Yeah, no, I agree. This is definitely a trend that we're seeing having increased attention over the last few years. So we see a lot of pilots going on and a lot of interest, but this is definitely a transition that will potentially take a lot of time. It's not clear how much, if any of the market will move on chain, but that's definitely the trend that we are seeing now, that it seems like it's moving in that direction. Also, as Ole mentioned, for different types of securities, there are a lot of interesting experimentation going on with bonds, also with money market funds. There's been some interesting developments. So, yeah, of course, recently there's been a few announcements about tokenized stocks. That seems like it's more about fractionalizing the ownership rather than increasing the efficiency in other ways. But we see within traditional finance, the conversation is more about moving to T+0 settlement, so more instant settlement and 24/7 trading, maybe more than fractionalization, which is also obviously could be interesting though. I think maybe the biggest hurdle that we have today is that we really need to, well, there's several ones, but maybe number one is that we need a trusted on-chain settlement assets. The best would maybe be wholesale CBDC. We don't have it yet, so that's a big problem. You could use stablecoin, but there are problems with both the trust in the issuer, also the amounts that you want to have. So financial institutions are not very interested in holding stable coins for a long time when there's no interest rate, also no interest on them, but also the third-party risk related to it. So we might want to see some financial institutions maybe move into that space first. So this is like a very big problem. Regulation is another problem. We have some regulatory regimes. You have the DLT pilot regime in the European Union. it has some very strong limitations that makes it difficult to operate under. And there are some other pilot regimes around, but this is definitely a place that needs more maturation. I think secondary markets are not well developed, and this is also where a lot of the potential will be when it comes to liquidity. And also just the sort of chicken and egg problem that in the sense that this is a network phenomenon, and it's not very cost efficient to be the first one to enter into a new network. So who are willing to actually make the first few steps here, knowing that financially, in the short term at least, it will not pay off. Maybe the upside is that you will acquire knowledge faster than people who are waiting for other people to join the network. So it's definitely a transition that I think will take some time, but it is picking up speed now, and it's very interesting to see.
Yeah, and just to add on that, Nikolai, on the platforms that are there are a lot of platforms out there, right? There's a lot of blockchain out there. The problem is that these technologies are not connected enough. They're still a little bit digital islands, and we believe that there will be more interoperability down the road. But as of now, it's a bit fragmented, and all these reasons we have discussed now is the reason why we think like will not happen. The broad adoption will not happen this year, maybe not the next year, but I think we'll gradually going there.
Then I thought in the end that I should address the elephant in the room, crypto. Are you guys thinking about any types of possibility to give your clients the possibility to trade crypto, either within your platforms, for instance, in the private banking, in the apps, or within a partner, through a partner? And are you also thinking about maybe improving the on-ramp part so it makes it easier to invest in crypto from your own bank, so that the road, both on-ramp and off-ramp, is getting easier? That's the question.
Yeah, I think at least one thing I can say is that it's maybe not a well-known fact, but we do already offer crypto exposure through ETPs that are openly available to our clients. This is for retail, professional institutions, it's for everyone. And we have very recently also created an information page that is open to both our customers, but also to everyone. This is an open page that shows the different types of exposure you can get today in DNB through various ETPs. So I think this is the first step in providing information to the broader public and also to our customers about the potential to get this exposure through traditional regulated vehicles. That maybe many are still unaware that this is even an option. You see in Norway, I think the adoption rate for the crypto ETPs is about 5% of those who are investing in crypto. 95% choose spot. And by providing more information about this, I think potentially that percentage might change, because there are pros and cons to investing in spot or in indirect exposure through traditional vehicles. So this is maybe the first step that we have taken here. When it comes to spot trading of crypto, this is obviously something we have been exploring. It's a very natural product to consider given the development we've seen with MiCA and what other banks are doing in this space. I think for us right now, it's still early. We do not have any planned launches of anything, but it is definitely something that we are thinking about and considering what would potentially be the necessary catalyst for us to do something like that, because we do see there's a wide interest among our customers. We also see that many clients, they prefer spot investment over indirect exposure. So some of the some of the catalysts are there, at least on the demand side. But there are many things in play here that needs to be at the right place for us to make an active move. But yeah, we have been exploring it.
Do you have something to add, Ola?
No, I just echo. That's a brilliant answer, Nikolai. It is like we really want, because of the demand, we really want to go there. But there is a lot of other dimension to this, and that's in the intersection we are having our wiggle room. So yeah, nothing to announce today, but as developments go further, we will have to see how we can offer the customer what they need in this space as well.
Do you guys agree that right now we are sort of building the future of finance, and where is the main opportunities? Is it in infrastructure? Is it in access to new type of investment? Is it in payments? Or where is the main opportunity viewed from a bank?
Well, I started to say that this is something that can be relevant for all parts of the bank, depending on the developments going forward. Obviously, we are a bank. We have been trusted by our clients by holding value over a long time, and that's our core business. And if more and more values are getting tokenized, it could be securities, but it could also be other real world assets, right? Other properties, values that our clients are holding, and another part of a core business is to provide collateral and give loans, right? So if these developments take place, it would also be very relevant for a bank to be here. And you are asking whether we believe what we believe in the future. What's certain is that the future is uncertain, but we have this team in DNB because there is a likelihood that this development will happen, and I think that's the closest we can come to saying that whether this is something we believe in or not.
Thanks for listening to this episode from Kaupr. If you enjoyed the conversation, subscribe to the Future of Finance podcast, available both on chain and on your favorite platforms. And remember, Future of Finance isn't just a podcast. Sign up for your newsletter to get news, deep dives, and insights, and to be the first to know when new podcast episodes drop. Stay connected with us and never miss an update.